हेलो दोस्तों, नेट चैरिटी चैनल में आपका स्वागत है। आशा करता हूं कि आप सब लोग स्वस्थ और खुश होंगे। आज हम देखने जा रहे हैं कंपैरिजन बिटवीन इनकम टैक्स एक्ट 1961 एंड न्यूली इंट्रोड्यूस्ड इनकम टैक्स एक्ट 2025। बिफोर गोइंग टू द कंपैरिजन, लेट्स सी इन ब्रीफ the income tax act, which was how it is introduced in India and how it evolved and amended step by step. Let's see. In India, Income Tax Act was introduced for the first time in 1860 by Sir James Wilson in order to meet the losses sustained by the government on account of military mutiny of 1857. In 1886, a separate Income Tax Act was passed. In 1918, a new Income Tax Act was passed, and again it was replaced by another new act, which was passed in 1922. This act remained in force up to the assessment year 1961 to 62 with the numerous amendments. The Income Tax Act 1961 has been brought into force with 1st April 1962. It applies uh, to the whole of India and Sikkim, including Jammu and Kashmir. Since 1962, several amendments of far-reaching nature have been made in the Income Tax Act by the Union Budget every year, which reached up to 800 sections. So हम ये देख सकते हैं कि इंट्रोडक्शन ईयर जो 1860 में हुआ था वो अमेंड हुआ 1886 में एंड विच रिमेन्ड इन फोर्स अप टू 26 ईयर्स। 1886 का एक्ट अमेंड हुआ है 1918 में विच वाज रिमेन्ड इन फोर्स फॉर 32 ईयर्स। 1918 का एक्ट जो 1922 में अमेंड हुआ which remain in force for 4 years. 1922 का एक्ट जो 1961 में अमेंड हुआ which remained in force for 39 years, and the 1961 act which now has been amended in 2025 and which will be implemented from 1st April 2026 was remained in force for 64 years. So now let's see how is the new introduced 2025 income tax act. Let's see. This newly introduced Income Tax Act enacted on 21st of August 2025, replacing the old Income Tax Act 1961. गवर्नमेंट के मिनिस्ट्री ऑफ लॉ एंड जस्टिस लेजिस्लेटिव डिपार्टमेंट ने with the assent of President of India on 21st of August 2025 को इनकम टैक्स एक्ट 2025 इंट्रोड्यूस किया है। यह इनकम टैक्स एक्ट is capable of consolidate and amend the law relating to income tax act in India. यह income tax act enacted by the parliament in the 76th year of Republic of India. Now we'll see the issue-wise comparison between Income Tax Act 1961 and Income Tax Act 2025 with the effect on taxpayer and on the system. First, we'll see legislative framework and structure. In Income Tax Act 1961, it came into force on 1st April 1962 and serves as the foundational law for levy, administration, collection, and recovery of income tax in India. It comprises of 298 sections and 14 chapters and schedules, depending on the source. Over 60 decades, it accumulated amendment, structural complexities, and extended provision. Now, the Income Tax Act 2025, it legislated by the Income Tax number 2 Bill 2025 passed by the Parliament on 21st of August 2025 with the President assent. It will come into force from 1st April 2026, marking the start of the first tax year. Dramatically streamlined to 536 sections, 23 chapters, and 16 schedules, replacing over 800 sections and nearly twice as many chapters of its predecessors. Yeah, this tax is easier to read, reduced litigation, and simplified compliance. Terminology. The old FY, PY, and AY has been consolidated into TY, that is tax year. Thus, AY and PY is replaced by tax year. In 1961 Act, tax was always computed with reference to previous year, that is PY, the year in which the income is earned, and the assessment year, which is AY, the following year, the year following to the previous year, that is PY, in which income is assessed. Example, income earned in financial year, that is FY 2024-25, which is called as PY, was taxed in the assessment year, that is AY 25-26. This created confusion for taxpayers. In Income Tax Act 2025 introduced a single term, that is tax year, aligning with the financial year, which starts from 1st April up to 31st March next calendar year. No more dual terminology now. The change is simpler compliance and communication. Ordinary taxpayers can relate tax filing directly to the same year in which income is earned. Tax slabs and exemptions. In 1961 Act, slabs were revised frequently by union budgets. Standard exemptions were low, middle class demanded relief. In 2025 Act, it retains 12 lakh exemption limit announced in the budget 2025, and 75,000 standard deduction for salaried individual continues. Fewer deductions and exemptions overall reduces complexities. Changes and effect to the taxpayer system are higher basic exemption plus cleaner system with fewer deductions and benefiting middle income groups. Standard deduction. In 1961 Act, it allowed deduction for house property, that is at the rate of 30% standard deduction, pre-construction interest on home loans, medical education, etc. It has complex conditions, overlapping provisions. In 2025 Act, it simplifies and explicitly clarifies deduction rules, such as house property deductions continues at 30%. Pre-construction home loan interest allowed in 5 equal installments. Pension commutation. Full deduction allowed for commuted lump sum for notified scheme. Effect on taxpayer. It is clear, the act is clear, simplified framework for deduction which leaves less scope for disputes. Capital gain provisions. In 1961 Act, it has rigid rules. Long-term capital loss, that is LTCL, could only be set off against long-term capital gains, that is LTCG. No mixing between short-term and long-term. In 2025 Act, one-time relaxation, that is LTCL till 31st March 26, can be set off against STCG from the tax year 26-27 onwards. It rationalized holding period, definition, and indexation rules. The effect on taxpayer, it is a greater flexibility for taxpayer to adjust losses, especially beneficial for equity or real estate investors. Provision in assessment system. It becomes digital and faceless assessment. In 1961 Act, it was initially a manual assessment, later shifted to partial and e-filing, and later on to the faceless. But assessment, scrutiny, and appeals often require physical presence. It leads to sometimes corruption and harassment of the taxpayer. In 2025 Act, it completely become faceless system for assessment, appeal, rectification, everything. Notices, reply, and hearings all will be done online. In-person interface only in exceptional circumstances, and that also through video calling. The effect on taxpayer, the system becomes more transparent, less harassment to the assessees, and time saving for the taxpayers. Refunds. In 1961 Act, refunds were often delayed, sometimes for years. For delayed file return, refunds could be denied or reduced. Actually, in that period, everything was manual, no automation or computerization. Communication was not so fast. Distances were more. Sometimes assessee moved out from the given address without intimating the department. In some days, the refund gets time barred as it used to be a check file. As per now in 2025 Act, based on automation and computerization. So processing become fast and accurate, and 24-hour working is there. As per new act, refunds will be allowed for the ITRs filed after ITR deadline without penalty. Time limits are fixed for refunds issued. Now the effect is, due to automation, things become fast and sometimes real time. Now things are system based. Taxpayer rights. In 1961 Act, officers have discretion to enforce recovery without prior notice. Now, in 2025 Act, it based on honoring the honest policy of the department. Officers must give prior notice before attaching bank accounts or initiating enforcement action against the SEC. Now, the effect is stronger taxpayer rights and more trust in the system and fairness in administration. Treatment of charities and donation. As per 1961 Act, it allowed anonymous donations to religious trust subject to limits. Loopholes were it misused the unaccounted money and routing the unaccounted cash. In 2025 Act, it tightens the rules. Anonymous donations only allowed for trust engaged in social services, not merely for religious rituals. Now, greater reporting obligations are there for the companies. Changes are, or the effects are, it promotes transparency, it reduces misuse of exemptions. Now, anonymous donation can directly be used for social services. Undisclosed income and digital assets. In 1961 Act, undisclosed income will be money, bullion, jewelry, or valuables which were not recorded in the books. No specific mention of crypto or virtual assets were there. As per 2025 Act, which expands the definition of undisclosed income to include digital assets like crypto, NFTs, in addition to the earlier ones. It brings digital economy fully under the tax net. The effects are recognition of digital assets, which prevents black money through cryptocurrency. Enforcement and privacy. In 1961 Act, search and seizure limited to premises, physical documents, and cash, etc. No explicit powers over social media or cloud storage. Now, in 2025 Act, in addition to physical things, search powers for email, cloud storage, trading account, social media, etc. are included, which may be subject to some safeguards. Now, the effects are, we are this act moves toward digital enforcement, but simultaneously it needs balance with privacy. Language and accessibility. In 1961 Act, the language is fully technical, full of cross references, and difficult for common taxpayers. In 2025 Act, the drafting is very simple, more direct, and plain English or Hindi usage. The effects are easier for public and professional to interpret and act accordingly. In nutshell, we can say the 1961 Act is bulky, outdated, and complex law. The 2025 Act is modern, simplified, digital first law with clear drafting, higher exemptions, taxpayer friendly rights, and explicit recognition of modern income sources like crypto. Biggest changes include unified tax year, 12 lakh exemption plus 75,000 deduction, simpler deductions in house property and pension, one-time LTCL set off against STCG, completely faceless assessments and appeal, refunds even after ITR deadlines, strict rules for donations, cryptocurrency included as undisclosed income, and digital enforcement powers. A shorter and clearer act, faceless and transparent, refunds notices exemptions are tax friendly, crypto recognition and digital enforcement, and targeted anonymous donation and stop its misuse and prevention. The Income Tax Act 2025 represents a sweeping modernization of India's direct tax regime, focused on clarity, digital efficiency, fairer compliance, and relevance to today's digital economy. It aims to correct structural inefficiencies, entrenched since 1961 while retaining taxpayer-friendly exemptions. The transition, effective 1st April 2026, promises a linear, more accessible tax law, but also underscores the need for balanced safeguards, especially around privacy in digital enforcement. Thank you.